Okay, it's the 3rd of October 2024. We've got about plus 15 minutes to the New York Open. So let's get to our charts as usual and do our analysis. Okay, so this is the daily time frame. Prices still ranging between 2672 and 2630, right? We're bouncing between these two levels. So that's about a 400 and a plus 400 pip range. We also are bouncing at 2650, which is right in the center of that range, right? That is either holding price above or price holding price below. Okay, so 2650 is in the center, and we've got 2672 and 2630. I don't, as I've said several times before, I don't use daily bias. I don't use any of the high time frames in my session trading, because I'm looking to trade just the first 2 to 3 hours of the New York Open, right? So if you are a session trader, if you're just trading the first few hours of a session open, which means it could be the Asian Open, it could be the London Open, it could be the New York Open or the New York Stock Exchange Open, you really don't need to understand what's happening on the daily time frame. If you're trading throughout the day for about 6 to 7 hours, then yes, it makes sense to understand what's happening on the daily. But if you are just a session trader for the first few hours of the opening of the session, then it really doesn't matter what's happening on the daily time frame. So let's get to our trading chart. Before we draw our zones, I just want to point out kind of what happened. These are the levels that we had drawn yesterday. If you go back and look at if you look at the first 45 minutes of yesterday's video, or if you look at the last 30 minutes of yesterday's video, either the beginning 45 minutes or the last 30 minutes, because that's generally when the first 45 minutes is when I do my analysis, and then the last 30 minutes is kind of when we're waiting for a trade for price to come to us, right? So if you look at either the first 45 minutes or the last 30 minutes, you'll see these levels drawn. You'll see the light red area that was drawn, the dark area, why it was drawn, how it was drawn. You'll see the light red area, the light red rectangle within that. So I'll just zoom in here. That was the large red area, and the light red area within the large red area, and price touched it perfectly and dropped about 220 pips. Then it also touched the light green area that I had drawn, and then pushed up another 200 pips, right? So those are the extremes. That's where I was planning to take a trade. So I always wait at the extremes to take a trade, because that's the place that offers a low risk, high reward, high probability trade. Okay, so that's where I want to be either selling or buying. Right now, unfortunately, price didn't. I had placed pending orders here. Price didn't trigger them. It just continued. The 15-minute candle opened, and the next, and it just continued to drop straight down. It did not come up for an entry. Now here it did come up, but I wasn't obviously trading at this time. This is the Asian session, so I wasn't trading today. I don't trade the Asian session, right? So that's just a recap of what happened with our levels yesterday. Let's delete all of these, and let's start the process again, drawing fresh zones. Um, yeah, let's just get rid of all of these. Okay. Yeah. Now, price is ranging, right? It's in a pretty ugly range. The range is getting smaller and smaller. I am, just to save time, I'm going to keep some of these lower areas. If you want to see how they were drawn, just look at the first 30 minutes of yesterday's stream or the previous day's stream, right? Because these price hasn't come to these levels, so it hasn't come to this area yet. So these zones, it makes no sense for me to redraw them. all over again, right? Just takes a lot more time. So I'm going to save about 10 to 15 minutes by not redrawing them. I'm going to draw the ones that are closest to current price. Okay, so I'm going to get rid of that and draw the ones that are closest to current price. Okay, uh, let's even get rid of that. Okay. All right. So that's almost a clean chart, at least in this range. It's clean. In this 300 pip range, prices, there are no zones. So I'm going to draw zones here. These zones, if you want to see how and why they were drawn, please look at the first 30 to 40 minutes of yesterday's stream, or the previous day stream, and you'll see how exactly they were drawn. Okay. Right. So let's look for supply first. There is a rally, a base, and a drop, right? So that's the leg in, the base, and the leg out. Okay, so there is a single base in candle there. The reason that's a base in candle is because that candle has more wick than body. So let's just mark that area there and bring it to the right. Okay, we're going to fine tune these and put the digits later, but we're just going to do this very roughly for now. The next one is right here. There is a rally and then there is a drop. Okay, but there is no base there. But that has come very deep inside this, right? It has already come, so that's all that is left of the zone. But that area is a reaction to this zone, to this rally, 3 base in candles and a drop, right? That's what we had marked yesterday. So I'm going to extend that up there. And that's how the zone was originally, okay? But price came deep, not that deep. Price touched it yesterday, okay? So we are going to kind of push it up there, because that's the area that price hasn't come into yet. That bit of supply is still fresh, okay? But price has touched this area, or has already touched it once and twice, okay? So just keep that in mind. Yeah, so we got a rally, 3 base in candles and a drop. Then we've got this. Just going to quickly look at the H1 here to see what we have. Okay, there is a rally and a drop there, but price has come into it. So what I'm going to do is I'm going to just take all of that in as part of one zone. Okay, so there is supply up there and there is supply here. The reason there is supply here is because there's a rally and then there's a drop. And if you go on the H1, it's a lot more clearer. You see the rally and the drop. And if you go down to the M30, you'll find the base in candle there. You should find a base in candle there, right there. That's the base in candle right there. Okay, that's the base in candle. But price did come deep into it. So we're gonna put that number down as 63.40. 63.40. And then here, the close 58.26. 58.26. Okay, and then this one, the high is 73.11. Yeah, 63.60. Okay, better, right? So that's where we've got supply. Now there is supply here as well, but I'm not willing to take a trade that far from supply. Okay, So this too is supply. If you just look at all of these are all base in candles, right? That's a drop. This is a base, base, base. That's a base. All of that is base in candles, right? Right up to there. But I'm not going to take that. I'm going to wait for price to get higher. Okay, so let's just extend these, right? Okay. We had marked these as higher liquidity zones. Price did not come to them yesterday, so I'm going to leave them exactly the way they were. Again, if you want to see why they were marked as high liquidity zone, please watch the first 40 minutes of yesterday's stream. Okay, um, I'm doing only the ones that are closest to current price, above and below. Here now, in terms of demand, we don't have any demand except for this one, right? That's the only one. That's the closest one that we have. So I'm going to extend that. Okay, price did not come further down, so we're just going to extend those. Yeah, and then that one too. So I've done about 15 streams so far. So if you really want to see how to draw supply demand, just watch the last 5-6 of these videos. The first 40 minutes, 30-40 minutes of every video, I draw the supply demand zones, and you can pick stuff from that and learn how to draw it. Okay, and also how to identify high liquidity zones. Okay, so this wasn't a high liquidity zone we had identified, but we said I'm going to watch this area, because this area is at right at weekly support, which is 2630. So that 2630 is from here. This is the high time frame, and there is 2630 there. There is daily support there. That's also roughly about weekly support, and that's weekly resistance right there. Okay, so price is between these two. I said this in the beginning. So that's those two yellow lines, 2672 and 2630. Okay, now yeah, so these are the zones that we have for the NY session. Okay, today there is news is in about 35 minutes from now. It's unemployment claims. That's the news for today. Unemployment claims, that's the first one, and then the second one is some services PMI, which is not really important, but unemployment claims may move price a bit. Okay, and tomorrow is the big one. That's NFP. Okay, that's the big one. That's the big one for the week, NFP. Okay, all right. So yeah, I'm gonna post this on the group. Okay. Yeah, so the reason that this is still demand is because we have a rally, a basin candle. That candle has more wick than body, and then we have rally. Okay, rally, base, rally. These two candles are the move out of this base. So that's why that's demand. Price hasn't broken through it yet. It's come pretty close. If you look on the H1, yeah, we have come very close, but we haven't broken it yet. The reason that this zone is a high liquidity zone, I mentioned this yesterday as well, is because this move up took out this the supply on the left. Okay, that's a rally base and a drop. There is a rally base drop there as well. There are two supply zones. This move out took them out, and that is why I have it as still as a high liquidity zone, although it's been touched yet, but there is quite a bit of the zone left. There's about 65 pips of that zone left, so I'm still going to keep it as a high liquidity zone, right? I'm not going to ignore this zone because we've only come to about 1/3 of the zone. Okay. um, Now here, uh, is this a high liquidity zone? Um, this one, has this taken out anything on the, we're going to probably have to go down to the H1 to see this. This zone, yes, it did. Yeah. So this, all of this is demand, right? This is a drop. These are two basin candles, right? So that's the zone. It's about 89 pip zone, and this move down broke that low, right? You can see that this low is at 41.18 and this low is at 41.03. So this low broke this low, so making this a high liquidity zone, right? Making this a high liquidity zone, right? Then did the zone above take out anything on the left? Did this zone take out anything on the left here? Again, we have to go down to the H1 time frame to have a look at it because it's not clear on the, yes, it did. So this move down took out this demand. So there is a rally. That's these are three basin candles, right? So that's the zone, right? It's about a 45 pip zone. That zone extended here. This move down took out that zone, this candle, and this candle started all the way up here, took out that zone. So this too is a high liquidity zone, right? So we have about 4 high liquidity zones above current price, and we've got this and this here, high liquidity zones below current price, right? But this zone 2, which is at around 2630, the weekly support, I'm not going to label it as a high liquidity zone, but I'm going to watch that zone because that was the origin of the move that took price up 480 pips, right? That was the origin of the move at weekly support. It started, it bounced at weekly support and pushed price. So I'm going to pay attention if price gets back there. But these are the high liquidity zones that we have for now. Okay. Um, Sorry. Right. So in terms of analysis, okay, do we have any new daily SR? Yeah, so we have daily resistance being created there. We have a bull candle, and then you have a bear candle there, which create a daily resistance. So the open of that is 266,274. Okay, 6274. Yeah, so you can consider that as do 2662.50, right? 2662.50. You can always take the closest round number. That is, yeah. So um, so the NY session has just opened, but we're going to wait for the next 30 minutes, right? We're going to wait. I'm not going to do anything until news comes out. So news is in 30 minutes from now. So we did touch, yeah, so we did touch this, and price is trying to push up here. So price is currently pushing up, right? Price is pushing up from previously tested. So this demand has been tested. Just bear that in mind. This demand zone is no longer fresh. It's been tested here. So it's already tested demand, but price is still pushing up from it. Okay. 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 So we've got about 20 minutes, a little over 20 minutes for news. So we're going to take a closer look at these zones like we usually do, right? That's what we spend just before we look to take trades. We look at these. What I do is I take a closer look at these extreme levels, so at these high liquidity zones, to see potentially where price can come inside that zone. The reason for doing that is because I want to have a tight stop loss. Um that and that has two reasons for that, having a tight stop loss. It has two benefits for it. Um, I'm able to have a bigger reward, okay, because price will, if my stop loss is tight, then price can run away from my entry very fast, and I can have a bigger reward, and I can have a smaller risk, right? If I have a tighter stop loss. If I take this entire zone, that's a 54 pip, 52, 54 pip zone. If I take this entire zone, that's a 94 pip zone. I don't want that. I want a tighter zone within, like we had drawn yesterday, right? We had drawn yesterday, and price came inside that, and I think that was like a 26, 27 pip stop loss, and then dropped, right? This about 25, 26 pips, right? And then it dropped about 200 plus pips, okay? So that's the reason for having a for drawing lighter red boxes in these high liquidity zones, is to have tighter zones to trade from. Okay, there is a benefit to that whole exercise of identifying. It takes a little bit of time, it takes a little bit of knowledge, experience to do that, but that will come if you keep doing it. If you keep doing the exact same thing over and over again during your sessions, then it'll get easier and easier, right? Okay, so we've identified, so let's start here. Let's start with supply. We've identified this as a high liquidity zone. Let's go back to the H4 here. Price can very well come here. You got to keep that in mind, right? We have a drop. This is a drop, and this is can be a basin candle too. These three can be a basin candle, three basin candles. Remember that, right? So 58.26, yeah. So price could come here. That's very possible. Could come here and then turn. But I'm gonna wait higher. I'm gonna wait higher. Okay. Yeah, I'm gonna wait higher. Okay. Now let's look at this area and see if there is a particular area of interest that price could come to. So on the H1, I see this in this. Now there is this big candle here. As I said, price can easily react to this, but I'm willing to miss a trade to wait a little higher, to wait a little deeper. So I'm willing to miss a trade. If price does not come here and reacts to this, this candle and drops down, so be it. I will not be in that trade. I will miss that trade, but that's okay. I'm willing to wait a little deeper for price to come deeper to be able to push down. Right now, that I'm well aware that price may not do that. It's 115 pips away. Price may not come. It might just come to this area and then push down. So we'll take a look at this area a little later. But for now, there is this candle, right, that caused the move down, that broke this demand zone, that broke this low, this candle, right? So if you go down to the, so let's just mark that's on the H1. I am going to take a look at it on the M30. Well, as soon as I see something, I like to mark it so that kind of so that my attention goes to that area when I change time frames. Okay, so on the M30 is that candle. The low is 816 and the high is 2948. Okay. If you go down to the M15, it's that candle. It's that candle right there. Right? It's that candle. Price couldn't come back to that candle. Just go down to the M5. I want to see what that looks like. Yeah, it's that candle. Okay. Price tried to come here, it couldn't. So the low of that is 59.28. Let's look at the, yeah, 59.28, perfect. Okay, now I've got a tighter zone. I've got a 36 pip zone, 37 pip zone, right, within that big area. 52 pip zone. Within the 52 pip high liquidity zone, 52 pip, I've got a 30 plus pip zone. I've got about a 35, 36 pip zone, which is more manageable, right? It's a more manageable zone. So now I would like to see price come up here. Now, if you go to the M30, this candle too had a lot of liquidity in it that pushed price down. Okay, I'm just gonna mark it here because I want to see what it looks like. If you go down to the 15-minute, it's just that candle, right, which is in the middle of nowhere. Price is reacting to it now. So if you go down to the 5-minute, yeah, maybe there. So I'm going to ignore that. I'm going to ignore that because it's in the middle of this. It's right in the middle. This candle is in the middle. I'm maybe not willing to take a trade right here. Okay, I'm more comfortable if price comes here for me to get in on a trade. Okay, right. Let's look at the area above as well. The area above, we had identified this right yesterday, and price did come there, but that area, a lot of that area is still left. So we're going to remark that area. Let's go down to the 15-minute and do it. Yeah. So that's how we had marked it and price touched it. Okay. Let's go down to the 5-minute. Yeah, that was the candle. That's what the candle that we marked. Perfect, and price touched it, tapped it right there. It tapped it yesterday. That was a tap, right, and pushed down. But I am going to mark that candle nevertheless. 896336. Okay, right. Now price has already tapped it once. If it hadn't tapped it, I'd be a little bit more confident about this zone. Just go up to the 15-minute. Okay, so price has already tapped this zone once. So that's the area that we have drawn, tapped it once. If it hadn't tapped it yesterday, I'd be a little bit more confident about this zone. But nevertheless, it's just I kind of wicked it right by a pip. by maybe a pip or less than a pip. But we've got that entire zone left, which is a 56 pip zone, right? So if price does get there today, I am going to pay attention to that. So the reason I draw these um, lighter red boxes is for them to stand out, um, so that I pay attention to those areas when price gets there, right? That's the reason I draw these lighter red areas within the high liquidity zones, right? Now these were drawn yesterday. Again, if you want to see why they were drawn the way they were drawn, you'll have to go back and look at yesterday's stream. It was based on that candle. This was based on that candle. There was a two 5-minute candles there that caused the move down. So I put those two candles together, and that's why we had that done. We had drawn it like that, and here we have based it on this candle. This was the reason for the start of the drop, and price tried to come back. So when price tries to come back and it fails, that's a fail. That's basically price is failing to return back to that zone. It's failing, right? It tried here, it tried, it couldn't. This came, touched it, and went down. So this too was touched just like we touched this yesterday, right? Exactly, by like a few points. This was touched as well, right? So price never came up there again. So that's also very likely that price might never come here again, because at least not today, even for the next, at least not for today. It might not come here, but this zone is there, right? That price could come to. That's where I'm going to focus my attention on. Okay, so we've got another 10 minutes for news. Um, yeah, that's the candle. The low is 928, correct? Yeah, 920, perfect. That looks very good on the M5. That's a bearish engulfing candle. Okay. Now let's quickly look down at demand and see if uh, we have an area of interest inside this. Now we've already have one here that we have drawn yesterday. Again, I'm not going to redraw that. Um, that's based off this M30 candle, right? That M30 candle started the move, kind of started this move up. Price pulled back, tried to get back into this green box, couldn't, and this M30 candle pushed. So that's the reason we've drawn that. Price did come to this candle, right? This candle is what we had marked yesterday. Um, it came to that candle, right? Came twice to that candle. So I'm no longer going to keep that area because it's come to that area twice. So this was a trading opportunity here within a very kind of a 35, 36 pip zone. There was an opportunity to go up there. If you go down to the lower time frames, there were maybe on the 1 minute or the 5 minute, there would have been a demand zone there on the M5. I think I had marked those levels, and price did touch them and moved up. But I'm going to now take off that light green box because price has come to that light green box twice, to that candle. So that light green box is based off this candle, right? That's what's important to note, that it's based off this M30 candle. Now if you go down to the M15, it's still that same candle there. That's the candle, right? So the high is 270,960. 270,960. Okay, yeah, so that's a tighter zone there. That's how we had drawn it yesterday. That's a 29 pip zone. That's exactly how we had drawn it. And inside that, I had marked, I think, a M1 or M5 demand zone, and price tapped it perfectly and went up 200 plus pips. Okay, so but those are not that I wasn't at the chart to take that trade. The moves have been coming in the latter half of the NY session. Unfortunately, this week it's been coming in the latter half of the NY session, so I'm not at the charts. It's not been coming right at the beginning. Even yesterday, if you watch yesterday's stream, we had to wait for about 2 hours for price to get up here, 2.5 hours until price got up here to come down. Okay, so again, price has come here twice, so I'm going to remove this because it's come up here. Now the next area I'm interested is down here, and then there's an area here based on that M15 candle. Okay, that's exactly at weekly support, so that's perfect. So that's about it. Now we're going to wait at these areas to see if price gets there for a trading opportunity. Okay. Um, Now, again, I've said this several times and I'll keep saying it. All of these things, this analysis that I'm doing here, you cannot do this on your mobile phone. You cannot. You simply cannot do detailed analysis like this on your mobile phone. And it's very important to your trading that 30 minutes prior to your session start time, whatever that session that you're trading, 30 minutes prior to it, that you come to your chart on a clean naked chart, you draw your zones, right? With a clear mind, you draw your zones on a clean chart. You draw your zones um, on a laptop or at least a desktop, a larger screen, right? Because that's where you're able to see exactly where these zones are. You can't see that on a mobile phone, and that is why I am against trading on your mobile phones. I don't have any of the trading apps on my mobile phones. I don't have any C Trader, MT5 or MT4. I don't have any of those apps on my mobile phones because the 2.5 or 3 hours that I dedicate to trading is my time for trading, and I sit at my charts at my desktop for 2 to 3 hours, and once those 3 hours are done, I'm I really don't care what price does. If price moves a 500 pips up, 500 pips down, I really don't care because those are outside my trading hours, right? So this right now, the first 2 to 3 hours of the New York Open is the time that I spend for trading. So during that time, I focus all my attention on what I have to do, right? So my zones are drawn. Now I just have to wait. I just wait for price to come to them. If they come to them, then I look for an opportunity. If it doesn't come to them, that's fine. Then I come back tomorrow, repeat the same process again tomorrow. Okay, so we've got about 5 minutes now for the NY Open. Let's just take a look at, so they're expecting bad numbers, right? So let me just explain how this works. So the previous reading was 218,000. So they're expecting high numbers. High numbers means higher unemployment, right? So that's bad. That's bad numbers. So generally, if they're expecting bad numbers and the numbers are bad, what price does is price is supposed to go up, right? That means the U.S. dollar gets weaker and and against the gold, and gold price goes up, right? That's what's supposed to happen. If the numbers are good, then the opposite of that happens. That means that the economy is stronger, the dollar has more strength, so the gold price drops down, and you would see price moving down. That is what is supposed to happen, but it never does because it. I wouldn't say that it never does. I would not say that, but most of the times it does not follow this because what's actually happening here is price is looking for liquidity to make a move down, whatever that move is. Now, we don't know what that move for the day is. If it's going to be down for the session for the first 2 to 3 hours, if price is going to move down, then if price needs to move down, for example, if price needs to move down within the first 2 to 3 hours of the New York Open, then it needs to grab liquidity. So it needs to move higher to grab liquidity to at a certain level, wherever that is, either at 2650 or somewhere around here or somewhere up here to move down. If it needs to move up for the first 2 to 3 hours of the New York Open, then it needs to move down to grab liquidity, right? To move down. Now, sometimes price may have already grabbed liquidity prior to the New York Open, right? So this could be one of those situations where price has already grabbed liquidity and now we're trying to move up. That could happen as well, right? It doesn't have to always grab liquidity within your trading session. It could happen prior to your trading session, right? You've got to keep that in mind as well, right? But all we can do is draw our zones and wait for price to get there, and then see if there is a possible trade, a low risk, high reward, high probability trade that we can take from those zones. Okay. Now, 3 minutes more for the for news. Price has broken two highs. We could use 2650 and drop down. That could happen, right? That could happen. Or price could just continue higher as well. If it does continue higher, then it's probably going to break this high here. Just take a look at it on the 5-minute. No, we don't have the whole Hervix. Let me look at on the 1 minute. No, that's a very sound area. Price has grabbed liquidity from the daily SR level 2657. We had marked this 2657 yesterday, and price has grabbed liquidity from 2657. That's the 1 minute candle. That's a clear rejection. A clear rejection. It's not a flat top. If this had no top wick, then I would have said that price may have come to grab liquidity above that, but price has this is the London session. This is during the London session today. Price has grabbed liquidity and moved down. Yeah, that's during the London session. That's a London high, by the way. Yeah, so price may drop, right? I think it's already grabbed liquidity from 2657, so price may drop. It doesn't need to, it may not need to come back up again. Might just drop here. And that's okay. If it drops here and it doesn't come to our zone, that's fine. That's absolutely fine. No. Yeah, so we've touched the EMAs. So price, the next candle could respect this high and fall down, drop down back to these lows here and further down to this green area. That could happen. 70, 73, 75 pip drop, or it's pushing up. See, it came very close there. Yeah, so we're going to wait for price. So this candle, wherever this closes, up here above 2650 or below 2650, it doesn't matter. We're going to wait for this candle to close and then take a look at where price is after this candle closes. Okay, so let's just look at what price has done for the day. I do this every day, right? I look at I show you guys just a kind of a summary of what price has done for the day. So let's find the open of the day. Okay, so that's the open of the day, right? That's where the daily candle opened, right there. That's the close, that's the open of the day. So price opened, went up. That is the Asian session high. Just mark that. Okay. So that's the Asian high. And That's the Asian low. Okay, so that's the Asian high, that's the Asian low. Then that's the London high. And that's the London low. Okay, so this is what has happened so far. In the Asian session, price moved about 95 pips, 94, 95 pips, right? We opened here, we went up, created a high, came down, created a low, right? Tried to get back up, we couldn't. Came down, broke the Asian low, went up, created the London high, respected 2657. That's the daily SR level, the daily resistance that we created yesterday. Sorry, a couple of days ago. Respected that. Couldn't get it. Tried to get back up. It couldn't. So it grabbed liquidity from 2657 and dropped and closed below the Asian low, right? So you'll see a 5-minute candle close below this. So once a 5-minute candle closed below this, then price continued down and came down to our demand level, right? Creating the London low. So that's the Asian, that's a London high, that's a London low. And during the London session, the London open, we traded, price ranged about, moved about 165 pips, right? So we moved about a 95 pips in the Asian session and about 165 pips in the London. So that's quite a lot of a move for the day, right? So in total, prices moved about 219 pips so far for gold, right, today. And now we are at the New York Open, right? So now we are about 30 minutes into the New York Open. We've had news. We've got about 10 minutes for this news candle to close. So that's what price has done. Now price has come to test the Asian low. That's what it's doing right now. It's testing the Asian low, right? So price may not come back up here because it did grab liquidity during the London session. It grabbed liquidity from 2657, right? This is an important area, daily SR area, right? I'm reading price for you guys so that you understand, you learn how to do this by yourselves, right? So again, when you see, I don't know which broker that you use, but on my broker on IC Markets, that server time there that you see, 3 a.m. server time is roughly the Asian open, right? Around 2:30, 3 a.m. on my server time is the Asian open. So that's the Asian high. Then around 6, 7-ish is where I would look for the end of the first 3 hours of the Asian session, right? So that's the Asian low. Then around 8:39 is I look for around after 8:39 I look for a high. That's the London high. And then around 11:30, 12:30 my server time, I look for a low, the lowest low during that time for the London low, right? So that's the London range, that's the Asian range, that's the London range, right? So now when you have this, when you draw these lines, you have a better understanding of what price has done. And when you have a better understanding of what price has done, you can kind of anticipate what price might do in the next hour or hour and a half, right? That's the whole purpose for this, okay? That doesn't mean that I figure this into my trading. That's not what I do. I look for price to come to this, but it gives me a better macro understanding or the story of what price has done throughout the day until my session starts, until the prior to the New York Open, what price has already done. Okay, I hope that's clear. So prices has tested, as I said, prices tested the Asian low. So if you go down, you can see a clear rejection there. If you go down to the 1 minute, you can see a very clear rejection there. So right, and now should continue down because we've rejected, closed below 2650, You see the M5 candle close to 2650. The M15 should close below 2650 as well. And then we are coming down. And where are we coming to? We are coming to the London low. That's where we're coming to. So if you reject this, then we're coming probably that's the possible area that we have to come to, right? The London low. Now, sometimes price pulls back up right to the London high, rejects the London high, and then comes to the London low. That happens as well. But right now, it may not need to come there because it already grabbed liquidity in the London session from daily SR 2657, right? This daily SR is based here. If you go on to the daily level, you'll see open 2657. Yeah, so that was a daily SR level that we had drawn. Here open 26266274. That was today. Yeah, so this was drawn. When was it? On the 26th of September, we had this line, right? 2657. So 2657 was drawn on the 26th of September, right? So price grabbed liquidity from 2657 and has pushed down, and we came back up here, we tested it, and we're pushing down, right? And if you look at that area on the M30, you will see a supply zone there, right? That's a supply zone. Perfect. So drop. These are basin candles. All these three candles have more wick than body. Okay, I hope that's clear. This has more wick than body. This has more wick than body. This has more wick than body. So it tested that. That zone is about 47 pips. And now price is testing it and dropping down. I said this at the beginning of the session, that price may react to this candle, but that I was not willing to take a trade there because it's not deep within. And I said the price may not come here, and that's very likely. The price may not come here. It might just drop down, because if you look over to the H4 time frame, that is a zone right there. That's a zone. Right? And that is what price is reacting to. Right? This drop, that's a base, second candle in the base, third candle in the base, and then the drop, and price came to it, reacted, and we're dropping down. Right? We touched it and we've dropped down 60 odd pips. We may continue down. This 4-hour candle may flip bearish and continue down. Right? That's okay. So if price doesn't come here, I don't get a trade, I'm absolutely fine. If it doesn't come to my area and I don't get a trade, I'm absolutely okay with that. Yeah, so we are pushing down now. We are pushing down. The 5-minute candles are closing, tested again, closing below. We are pushing down, right? We are coming to this green area. We're about 35 pips away from that area where we should come down. There is no top wick on this candle, so we may come up, create a top wick, and then continue down. Okay, so I'm going to get rid of these lines. Those lines were just to illustrate what price has done right until now. Okay. Okay. Now, since we grabbed liquidity here, since that was a zone, I am going to draw my fib on this and see how big my stop loss would be if I get here. 40 pips, that's quite steep. Yeah, we grab liquidity here. Came back, tested. Yeah. So that's what I'm going to do. I'm going to draw my fib here, right? Because this is a liquidity grab from that H4 supply zone. So if you draw the zone lower like I just did, if you draw it right here, then this candle did touch it. Okay, but I had drawn it right up here. But if you draw it here, using this as the drop, base, 1, 2, 3 base in candles, and then drop, base, drop, 3 candles in the base, and then the drop, right? Leg in, basin candles, 3 basin candles, leg out, and price came there, right? So now I'm going to wait for this 15-minute candle. This is a news candle. Wait for this to close, and that's 2.5 minutes. High 392, 598, 392. Okay. Now if this comes lower, then this zone is going to get much bigger. Yeah, it's very likely that price is going to drop further down. Yeah, that's 40 pips. It's too much. Coming even lower. So that area is going to get a lot bigger now. 575. Yeah, we could come here. That's where we're coming to. Say 68 pips. It'll drop. But I want to see if price can pull back here. Wow, that's low. The zone is getting bigger and bigger. Now it's almost 50 pips. We're coming down. But we should come down here. It's another 60 pip drop. We should get another 60 pip drop because price has tested this area. If you remember, I had drawn a light green box here, and price has tested that twice. So if it's falling down, it should come to this light green area, deeper into this high liquidity zone, right? And that's about 75 pips away. Okay, now the candle is about to close. It is pulling back a bit. 448. 448. Okay. That's a huge zone. 8. Yeah, let's see. I'll take a very small position here if we do come here. If we do come here. It may not. It might just come here and then drop. I don't think it's unlikely the price is going to come all this way up here. Yeah. I've tapped into that zone, so maybe above this high. That's possible. So the open 49. So okay. We've tapped in there, so that's the only probable place to get an entry if it does come there. Then take another one up here. $56. Yeah, we're just dropping. We're just dropping. We're coming down here. It's unlikely if the price is going to come all the way up there. So let's see when price gets here, how it reacts. If it gets here, or if it gets to this area here, I think it'll very likely break through this zone and come to the next one. 2 weekly support. That's probably where price is going to be attracted to, right? That's about a 150 pip drop. That's where price is going to be attracted to. Yeah, so we're not coming up. We're just, once you break the low, we should come straight to this green area and then maybe continue down. Unless the next candle, next 15-minute candle breaks this high and goes up to grab liquidity and then continues down. But I'm going to leave my pending orders there. Stop loss above here, 53.92. Okay, stop loss above there. If I do get entry, I'm anticipating price to come all the way down here, about 100 pips, right? That's the plan. Yeah, but I doubt it. I doubt price is going to come up there. And that's okay. Once you break the low, this M15 low, we should continue down. Once you break this low, we should come down. We're coming down straight here. Once you break the low, that's a 60 pip drop, 65 pip drop, coming down here. But I kind of had to wait for the candle to close. So this opened at 1545. Yeah, this was the open of the candle. Yeah, I cannot take a trade while the candle is still open. Yeah, because I don't know where it's going to close. If it's going to close above, if it's going to close below. So I have to wait for this candle to close to draw the fib. I can't draw it while the candle is open because I don't know where the low is going to be and where the high is going to be for the candle. We're going to break this now, maybe in the next 5 minutes. Break this low and then continue down. Okay, so let's just draw some support resistance levels so you guys can learn how I draw these levels. I do these every day as well. Yeah. Yeah, so we broke the low, we are coming down. Now, it's very unlikely the price is going to come up here. We're coming down. Once we get into this green area, we're coming straight down. Right? So this has been happening very often this week. Price refuses to come back up, right, immediately to get us in on a trade. It does much later on. So like what happened yesterday, this was the candle that I want to trade. This was I drew my fib based on this candle, right? Yesterday, the New York session based on this candle. And the candle price did not come up. It just opened and fell. But later on in the Asian session, it came exactly to the sniper entry and then fell down, and it's still falling, right? But that's not my trading hours, so unfortunately, there's nothing I can do about that. Very similar here. right? Exactly what's happening here. So that's my liquidity wick. It grabbed liquidity from this zone, H4 zone, right? Because the H4 zone could be drawn a little further down as well. So that's how you then it came to the H4 zone. And the next candle did not come. This M15 candle did not come up here. Did not even come to the mid of the fib to be able to get an entry. Just fell short of it by about 18, 17, 18 pips and just continuing down. Now we're going to just go right down. Yeah. Yesterday we couldn't draw it here, right? Couldn't draw that line here. Okay. That's the support level. So once price a 5-minute candle closes below, which it already has, yeah, it have close below. We are continuing down and we're coming all the way here. But once we get into this green area, we should just very quickly drop down. Should very quickly drop down all the way here, right? Once it comes here, we should just push straight down, and that's the NY move. Now again, it's unfortunate that this candle where price opened here, the 50-minute candle, did not even attempt to come up. It just carried straight down, dropped straight down. That's, yeah, it's unfortunate, but that's okay. Yeah, price is just pushing down now. So how I've drawn this support resistance area. Okay, price reacted, tried to close below, gain came back, closed above, then closed below, gain closed above, used it as a base, sat on it, went up, reacted, came back, then again closed above, right? And now if you look left of that, you'll see how price has reacted to it perfectly here, right? Here. We had drawn these levels yesterday as well. Perfectly reacted to it, right? So once you do draw them correctly, you'll see them work on several time frames to see how the reaction is perfect, right? Yeah, that's it. So if you go up to the M30, you'll see them work perfectly all the way. If you even go on to the H1, you'll see how they reacted perfectly, right? If you go down to the M5, you'll see how price reacted to it. So you'll see it on at least three consecutive time frames if you draw them correctly. Right? Now, there is no need to draw support levels further down because we are in a demand zone, right? Now, while price is inside supply or inside demand, I don't draw support resistance levels inside them because the reason for that is this is an area. If you did get in on a trade here for whatever reason, whatever, if your trade plan allowed you to get in on a trade here, then this is an area that you should be looking to take partial positions off your trade, right? Regardless of where support or resistance is, because this is a demand level. It's a valid demand level. Price may break through it and come all the way down, but still it's a demand level, right? Price, we don't know. Price can always react to this and push up again. So this is an area, regardless of where support or resistance is in this area, you have to take some percentage of your position off. You have to learn to take a percentage of your position off in this zone, in this green area, because this is a green area that could possibly hold buy liquidity to head price up again, to push price up again, right? The opposite goes for supply. If once you get here, once price is inside here, I don't draw support resistance levels like I do here. I don't draw them inside because there is no need for it. Because once price gets here, if I was in a buy trade, then I'm looking to close partial positions somewhere here. Some sort of at least 50, 60% of my position, I'm looking to close it here, right? Because price can always reverse or react to these zones, to these high liquidity zones, okay? Okay, so you've got a minute for this candle to close. That'll be that'll also be the close of the 30-minute candle and the 1-hour candle. So price should, once the 30-minute closes inside this green area, the next one should just continue down. Okay, so yeah, once the 30-minute closes here in this green area, there is not a single 30-minute has closed in this area, you can see, right? Not one. So once this candle is going to close in 30 seconds, once this 30-minute closes here, the next one should pull up maybe to this resistance area now. Now this support has turned resistant, so has turned resistance. So pull up to that and then push down further. Yeah. So as I was saying, uh, okay, so this is the first 30-minute candle that has closed now inside this. There is nothing that has closed before, right? Prior to this zone being created, after this zone has been created, it's on a single candle, M30 candle that closed inside it. Now we have M30 candle close inside it. So now we go up, probably grab liquidity, come straight down. We're coming here. This is where we're coming to. Okay, right here. Now, I'm going to close these pending orders. So there's no need for them. Prices, I don't think price is going to go up there again now. We're already inside the zone. Yeah, so I'm going to go up 75 pips, 80 pips to come down. It's unlikely. Now we're going to look at this light green area and see if there is an opportunity there. So that's about a 40 pip zone. Sorry. Let's go down to the 15-minute, like we usually do, and maybe the 5-minute. Yeah, we had marked this level yesterday as well. 641. So the reason I marked that is that's a drop. I'll zoom in for you guys. It's a drop. That's all basin candles there, right? And then a rally, right? That's why I mark it. And now that zone is about 18 pips now. It's much smaller than uh, a 40 pips, a 40 pip zone, right? 18 pips. That's a lot more manageable zone. Now, I don't know if price might get there. It might just bounce off here. So we're going to look further up and see if there's a zone as well. Um, yeah, here. Rally, base, rally. So close 845, close 845, close 845. I'm not too keen about this taking a trade here because we've got a lot of bearish momentum right now, and it's like I don't want to try to catch a falling knife. Okay, so even if there is a trade, it might just be a very small reaction because there is a lot of bearish volume. um, 22 pips, 39. Yeah, so we're pushing back now, possibly to grab liquidity to continue down. The 30-minute has closed inside, so could just be pulling up to grab liquidity to continue down. We do have another news event. That's not that important, but that's at the 4-hour candle close. Um, it's with the 4-hour candle close. So, yeah, ISM Services PMI. That's a news event. ISM Services PMI, not really important. Even though it's a red folder, I don't consider these as important news events. But the reason it could be important, it's right at the 4-hour candle close. Okay, so is that could be important. We might have liquidity that comes in at the new 4-hour candle open, um, rather than for the news event. So yeah, we are reacting to that area. If we close a doji, then price should continue down. Yeah, it's kind of reacting there. We are continue down. Yeah, yeah. Pull back up and now straight down. Yeah, touch this gray area and continue down, and then further down. Anyway, um, yeah. So we closed below this M5, continue to this, then close below this, then we're going down. It's a minor resistance level. Price may come up here to go down, but still, if it does come up here and reacts to it, that's still too far away for me. I needed price to come a lot somewhere inside here, very closer to 2650. But price has already grabbed liquidity from 2650, so it may not need to do it again. Once you get a high liquidity candle from certain area, from a very important area, like how you got a high liquidity candle here. If you look on the, okay, that's a liquidity wick. Price grab liquidity, push down, regardless of the candle being a doji, that grab liquidity in That's a 16 pip, 17 pip wick, right? Um, so once it does that, it may not need to come there again. Similarly here, once you have this liquidity grab, that's around 2650, price may not need to come back there again to go down, unless price is trying to reverse here to go higher, unless. So in that case, then in opening a trying to get a trade in here is still a bad idea, right? Because then you're just increasing your risk. That's the reason I always wait inside deeper inside a zone to take a trade. And I don't always get a trade. I don't always get an entry, but that's okay because then my stop loss is much tighter. And then if my stop loss is tighter, several things happen. It's easier for me to manage risk, right? If my entry is at a better price, right? So for example, because I'm selling, I want to get I want to buy I want to sell at the most expensive place possible in this candle, right? So within this candle, the most expensive place is here, or maybe at 2650. So if I get in a trade here, then it's easier for me to manage risk. So when I see M15 candles close inside here and those high breaks, I can close partial positions, right? And then also for price, if I have a losing trade here, uh, then because my risk is smaller, my loss is smaller. So then it's very easy for the next winning trade. Whenever that winning trade comes, it's easy for that winning trade to recover that small loss rather than taking a trade with a 60 pip zone that turns out into a loss, and then the winning trade has to do a lot more, has to move a lot further to recover that loss. Yeah, does that make sense? Yeah, so like I said, the 1 minute reacted to this and we're pushing down. So if you go down to the 1 minute, there you go, that was the rejection. Then it respected those highs and price pushed down back to these lows here, right? Um, we came down here again, 27, 26, 27 pips. So price should continue down. You kind of want to see 15-minute candles close now because this is a demand level. You want to see 15-minute candles close inside it to continue down. That's what you want, not 5 minute, right? Want when it's breaking these minor support resistant areas, it's okay to watch for 5 minutes or 15 minutes. But once we get into a H4 demand area, you want to see 15-minute confirmations or 30-minute confirmations like this. 30-minute confirmation inside for the next candle to continue down. So now you want to see a 15-minute candle close inside this again, a 15-minute candle close. So maybe this one pulls back and the next one comes back and closes inside. Then for price to continue down to this lighter green area, this lighter green rectangle that we've drawn, right? Okay, we've got about 5 minutes for this candle to 4 minutes for this candle to close. I'll just be back. We are coming up again to this resistance. If you break this high, price could stall at this resistance here and then continue down. That's very possible. It's less likely to come up all the way here. Less likely. Unless it's reversing to go higher. So we got about 20 minutes for NYSE. So this is probably, okay, this was the NY move. This is the pullback for NYSE to possibly continue lower. So if price gets here, I'm willing to take a trade and manage risk on this candle. 746. Yeah, I'm willing to take a trade here. Close 028. Open 23. I'll have to manage risk on, that's a very big zone. It's 30 minute. Do 8. For 7. Open 815. Okay. I'm willing to take a trade there, manage it here. Obviously, I'm not going to let my stop loss get hit all the way up there. I'm going to manage my risk down here, up here. But that's the lowest I'm willing to take a trade at. Nothing. Yeah, I'm not willing to, even though price may react right here. Okay, let's see. Because this is the reason for this. This is possibly the pullback. 15 minutes NYSE will open. So NY has pushed down, right? We've pushed about 100 pips down. So this is the possible pullback to continue down. That's the reason I want to get in on this trade. But if we come deeper, I'm obviously going to manage risk. So I'm going to, it's the 15 minute open 780 close 780. Okay. see if you come here. All right. 63.92. 63.92. Okay. Got entry. Just gonna wait for this 15-minute candle to close. And then anticipate price coming. This is a single M15 candle, and I can't manage risk on this M15 candle because just one. I need another candle here to be able to manage risk. Okay, so there isn't one. So I'm going to look at the M5, and maybe if price gets up here to this, I might close these positions if we come up right here. We are pushing up. This high is 949. So we closed back. So price closed below the support, closed back above support, and the next one broke the high and continued, but this candle has no bottom wick. So this M15 high, price broke this M15 high, anticipating this M15 candle to create a bottom wick. Either this candle creates a bottom wick or the next one does. That's the hope. The price continues further down. Open 49.91. So we touched the 50% mark of the fib, right? Touch that. Touch the 50% mark of the fib. We're reacting to the 50% mark of the fib. Price is coming down. What is the low? Once you break this low, partial positions should close. And if it closes back below this resistance, then price should continue down. The plan is that NYSE will push down here. That's the plan. It's 90 pips. NYSE pushes down. That this is not a reversal, but a pullback to continue down. That's the reason for this trade. There is a H4 supply zone here. I did show you how it would be drawn lower down. We had a liquidity wick. M15 was drawn based on that M15 candle liquidity wick. Price came, touched the mid of the fib. There is also a resistance level there. I put my entries at the resistance level instead of there because I thought the price may not come all the way up there, but it did. Now the next level is 2650 or 265150. Now if price comes closer above 265150 or 2650, if an M15 candle closes above 2650, then I'm going to manage risk on that candle, right? So if this 15-minute candle closes above 2650, right, just like this one did, closes above, then price is going higher, just like this candle. Once the M15 candle closed above this candle, so if you see, this M15 candle closed above 2650 and price broke the high and went higher. I don't want to be holding my trade in a situation like that. So if an M15 candle closes above this 2650, that's when I'm going to manage risk on these trades. Okay, got 5 minutes more for that. It's got 5 minutes more for the NYSE open. The anticipation is that this is the pullback to continue down because an M30 candle and an M15 candle has closed inside this green area, which has not happened before. So this is the pullback to continue down here. So NYSE moved, NY moved 100 pips. So yeah, can anticipate price to come down here. So what I'm going to do is, yeah, this 2639, 269, and then 2637. Yeah, so 5 minute has closed below here, the resistance, and now we could pull up here higher and then go down, or we could just continue down now. But we got to wait for this 15-minute candle to close, because if, as I said, if the 15-minute candle closes at 2650 or above it, that's when I'm managing risk on these trades here. I'm going to keep this trade open. This trade is going to be open. I'm not going to do anything to that trade. That's going to stay open, but I'm going to manage risk on these ones. The first 15-minute candle will very likely break this high, continue high, and then come down, if it is. But a candle's got to close above this. Until it closes, I'm not managing risk. I want to see a M5 candle close above or M15 candle close above this, then I'm going to manage risk. Another minute, minute and a half. All right, so we're coming up here. The 15-minute candle should close. If it closes above, then that's where I'm managing risk. I'm going to close one of these positions. That's what if it closes above this, the next one's going to break the high and it's probably going to continue much higher. So I'm going to close one of the positions or probably close both positions. Okay, we're closing below it. It didn't wick it yet. We're closing below. That's the 30-minute candle close. 30-minute candle closed. This is the NYSE open. We're still going to wait. Still going to wait. We tapped that supply zone. We've tapped coming higher. Okay, 2650. Now 5-minute candle needs to close above here, then I'm going to manage risk. So we've got a minute for this candle to close. It's going to wait for this 5-minute candle to close. Once this 5-minute candle closes, I'm going to close the trade. Yeah, pushing high. So all right. Ten seconds. 5. Okay. Closed. And closed. So closed these entries here. I've got that entry open. I'm gonna take an entry here. I'm gonna take an entry right there. So I just, you're reacting to that. Gonna take an entry right there. This high is 138. So this 5-minute closed above 2650. If this 5-minute also closes above 2650, then we are heading all the way up. Then there's no reason to hold these trades. We're going to close both of them. Got to wait for another minute to see where this 5-minute is going to close. It's going to close above, then above 2650, then price is heading much deeper, or probably going to go all the way up and fill this wick. It's going to trade into this range. So this candle has already closed above. So the next one needs to close back below this range, or below 2650. If it doesn't, then we're heading up, and there's no reason to hold these trades in drawdown. There's absolutely no reason, right? 40 seconds more. It's got to close below this, or below 2650. Yeah, we're coming down. We're coming down. We're coming down. Okay, so 5-minute closed back below. Yeah, this is the NYSE open. So another 5-minute needs to close below this. We're coming to this support here. So this support is when I will close partial positions. That's at about 50, 55 pips. So this candle closed above, this one closed back below, right? So it was struggling here. That's the reason I took that entry. I should have taken the entry here where I had marked 265092, but I couldn't place pending, and I got in about 3 pips below. We should continue down. We should close below this. We should close below this. This 15-minute candle has to close below 2650. If 15-minute closes above 2650, then same thing. Then the next one is going to break the high and continue higher. So there's no reason to hold the trade. It has to close below this resistance. There's resistance right here. There's a minor resistance right here. And that resistance is exactly at 2650 psychological number. So this 15-minute candle needs to close below 2650. If it doesn't, and it closes above here or above this resistance, then the next one is going up, is going to break that high, and we're going deeper, right? So we don't want to hold a trade knowing that that's going to happen. That has a high chance of that happening. Then you're going to close the trade. Yeah, we are pushing back up. Yeah, so price is pushing back up, very likely going to close above 2650. If this candle closes bearish, then we should head down. Just got about 30 seconds for this candle to close. It has to close below 2650, preferably a bearish candle to continue down. If it closes above, then price is heading higher. And this is the high. The high is 138. 138. There is absolutely no need to hold the trade beyond 265138. So far we've taken a 0.49 loss, almost 0.5%. I want to control that loss. I don't want to let it go, So we've closed below 2650, but that's a doji. So it could kind of go either way. The next candle could go either way. It could go up and close above or close above. But if we break this high, I'm closing the trade. Because then if we're going much higher, there's no reason to hold this trade. Yeah, we are coming up there. Got news also in about 15 minutes, and we got the 4-hour candle close as well. Yeah, okay, so we are coming up there, and I'm gonna close this trade. The 4-hour candle is rejecting that area. But there's no need to hold the trade once the 15-minute high breaks. There is no need, because once the 15-minute high breaks, prices can come up here. That's a 25 pip range for price to trade in. There's no need to hold drawdown for another 25 pips, right? So that's a logical place to close the trade. Either close all of it or close majority of it, because price is going to come. It's 25 pip range to hold drawdown. There is absolutely no need for that. So this is the NYSE open, and price is still kind of ranging. Yeah, we're still ranging the NYSE open. Price needs to break this low. If it doesn't break the low, then it could be continuing higher. It has to break the low. Respect this high and break the low to come down here. If the candle ranges within this range and closes like an inside bar inside this range, then the news candle might either break the high or break the low. Okay, so we're breaking the low. It's a good sign. Once we break the low, we should continue to, yeah, we've broken the low. So we are respected this high, we are breaking the low in the first 5 minutes. We should continue down here. If you come down here, partial positions should close at about 50 pips. That's why I've set it to 50 and the next one at 110. So this candle closes in a minute. This M5 candle should ideally close at support, at this support level or below it, to continue down, for the next one to continue down, right? So went up, grab liquidity, came, grab liquidity, we've come here, we got to break 1625. Yeah, the M5 candle should, if it closes below this, then we're coming to this support here. If it closes below this support, then we're coming to this low here. Okay, that's how it works. So 30 seconds for this candle to close. It either needs to close at the gray, inside the gray area or below it. Yeah, okay, so we close below. The next candle should break the low, should continue down lower. Okay, this is NYSE volume. We should continue down. If a 15-minute candle closes like this, then the next one should continue down. But we got news in about 9 minutes. So I kind of want partial positions to close on this before news. That at 100. Yeah. I want partial positions. So we're about running in about 38, 39 pips, 40 pips, 40 pips running right now, 40. So yeah, stop loss was about 35. It was a little too much. The price didn't get to that level, so that is why I had to open trades here. Should pull back for liquidity from here and continue down to this. Another 10, 12 pips to the support. So 2645. So 2645, price should touch 2645. That's the first TP level around 2645. We should touch that. We should touch that. Yeah, we touch that, partial position should close 2645. Set it at 50 pips. So if we close below here, another 5-minute candle, this 5-minute candle closes below here, then we should come to 2645. Right? But this candle needs to close below. If it goes back up, closes above again, then we could be going higher. Okay. This 5-minute candle has to close either at this gray area or below it, just like this one did, to continue low. Uh, 2 minutes more for this candle to close. Okay, we are coming down. Yeah, we are coming down. I got a couple of minutes more. So ideally, this was the idea, right? That price came into H4 supply. This was the NY move, about 100 pip move. Price pulled back prior to NYSE, and then NYSE also continues down. That's the idea of this trade from H4 supply. But we're still struggling. We're trying to get back up, trying to close back above. Now it's got news. That's my only concern, that we have news in about 7 minutes, and price is closing back above here. If you do close back above, yeah, then we are heading higher. And I'm going to still close the trade only once this high breaks. That's the idea, the original idea to manage risk. Once this high is right at 2650, the candle that broke 2650, so once that high breaks, I'm going to close it. About 5 minutes more for this M15 candle to close. This candle should close at support or below it, this current candle, for price to continue down. Because then the 5 minute should close down. If this candle, if price now continues down, then the 5 minute will close below it. Because this is the last 1 minute candle of the 5 minute candle. No, sorry, that was the last candle. So we did close below it. We did close below resistance. It is a bullish doji, but it did close below resistance. So we're going to wait. We're going to hold in this trade. If this high breaks, then I'm out. 5 minutes more for news. Maybe price is just going to spike up in news, or maybe go down. I don't know. Three minutes more for this 30-minute candle to close. And if this 30-minute candle closes above this support, then price is heading higher. Then the next candle is going to break this high, and we're going up. This candle has to close at this support or below it. In the next 2.5 minutes, this M30 candle has to close at this support here, inside the gray area, or below it. If not, the next candle is going to break the high, and we're going up. Same with the 15-minute. It has to close below. It has to close at this support or below. 2 minutes more. And that's the close of the 4-hour as well. So the 4-hour, ideally I want to see the 4-hour close also at this support, either at the support or below it, right? Not above it. Above it means price is heading higher. Price is heading higher. And maybe all the way up here, it's got this wick to trade in. This entire wick, it could trade 54 pips. Then it's got this range, then it's going up even higher. Okay. So I'm not going to be holding that. I get out here, right here. That's where I get out. So finger on the trigger minute and a half news. Do you want to see this candle close here? It's very likely going to close above. Very likely going to close above. When it closes above, I'm going to close. A minute more. 1 minute more. It needs to close. This 1 minute candle needs to close at this gray area or below it. It's as simple as that. In the gray area. If it closes below, then that means the 4 hour, 1 hour, 30 minutes, everything is below. All comes down to this candle here. 10 seconds. Yeah, we closed below and we fell straight through. Oopsie. Wow, it didn't even close. Partial positions closed, but my trade didn't close. It's just wicked straight into that zone. Okay, this. Okay, closed one there, and let this 1 minute candle close. It dropped exactly to this light green box. Yeah, okay, I closed because this 1 minute candle closed back above this, so there's no reason to hold the trade, but the trade did work. It just didn't close. It touched this. That was the final TP right there. The broker didn't close because it was too fast. It just slipped, right? Price went up, down, and came back up. But we did make up for the loss, and we made about 1%. What's important to remember out of this is that if you manage your risk, if you manage your trade when you go in drawdown, it's very easy for the winning trade to recover the loss, and that's exactly what happened. I'd open an entry down here, price went against me, I managed risk, I didn't let it go all the way up. So when the next trade for it to win, it was very easy for it to win, right? And not just to win, to recover the loss, not just to recover the loss, but also to have some gains for the day, right? So anyway, so that's also the I think the end of the session. Uh, yeah, I'm not going to be here anymore because tomorrow is NFP. Tomorrow is a big day. Um, this trade idea did work out. So that was one entry was there, one entry was there, and it did work out. Came down 125 pips. Unfortunately, it didn't close because of slippage. But since price touched this area, I'm not willing to wait for price to come down here again. I'm not willing to because price has touched it, right? And that's exactly what we marked. We had marked this demand zone 263845 and it touched it to the pip and pushed up 90 pips, right? So that's the candle that pushed up. This candle pushed up 90 pips, right? So it may as well come right down here and come further down, but I was not willing to hold the trade because it touched the demand zone, so we could go higher. But now, if price comes down and breaks this low, then we're coming all the way down here. Another 100 pips, we're coming all the way down here. Okay. Anyway, how long have I been here? 2 hours, 20 minutes. Okay. So that was TP1, 50 pips, and the next one was 100 pips, but it didn't close at 100 pips. But now it's coming further down. Anyway, okay. Um, all right, yeah, I'm not looking to take any more trades. Price may as well come down all the way here. It might do that. That's the next area. Now this was a tested area. If you remember, I told you guys at the beginning of the session, this area, this high liquidity zone is tested. Okay, it's tested here, it's tested here. I had mentioned the same thing on the group as well, that this is a tested demand zone. Even though it's a high liquidity zone, it's a tested zone. It's been tested once, tested twice, and now it's tested 3 times, and now it's come deeper in, right? So I'm not looking to take a buy trade here. I'm not looking to take a buy trade here. Price will probably come down here, but that move is going to take at least another hour and a half, and I'm not going to be here. That's outside my trading hours. So I just want to look at how the 4-hour candle closed. Because the 4-hour candle closed below the resistance, just like we expected. We wanted it to close below resistance, and that's exactly what it did. It closed below the resistance, right? That we had drawn. That is why it's so important to draw these support resistance levels correctly. Learn how to draw them correctly. When you draw them correctly, they will work on at least the 3 consecutive time frames. So you see how I drew this on the M15, right? You can go back 45 minutes in the stream and see how I drew this support resistance level, right? And it works on the H4, it works on the H1, it works on the M30, it works on the M5, it works on the M1, it works on every time frame. And the 4-hour candle closed below it, and then I said if it closes below, we're coming down, and we did come down, but it happened very quickly, right? And you can see it came down, but it closed back above. That's very important. It came down, closed back above. So price did come back, but now it's coming back into. So now if the 5-minute candle closes, if this 5-minute, so this 5-minute closed in support, right? Inside the support level. So the next candle is very likely to break the high and go all the way up again. Okay, so I'm not going to be here for all the drama. I'm done. I got a winning trade. It was exactly as we had planned. It was from a level of area of interest that I had kind of anticipated, even though I had not drawn a supply zone here. I said that there was a supply zone right there, and I had shown you guys why price reacted to it. The Asian low, Asian high, London low, London high, all of that. You can go back and watch the first 45 minutes of the stream, and I explain all of that really well why price did come down here, right? So now we're respecting the London low. We're closing back above it. So we're going to very likely go back up to the London high and then maybe continue higher. Okay. Okay, so that's going to be the end of the stream. I'm going to be back here tomorrow for NFP, same time. I'm going to do our analysis, draw our zones, identify our high liquidity zones, and then wait for NFP. When I'm going to trade, I'm not going to trade during NFP. I'm going to wait for the NFP M15 candle to close, and then see where price has come to. Has it come to one of my areas of interest, or a high liquidity zone, or any of these light red or light green areas, and then look to take a trade. Look at this. Look how precise this is. Look how precise this is. This zone is about 38, 39 pips, right? This zone that are this M5 or M15, M5 demand zone that are, I think M15 demand zone. Go watch back. Go look back. The first 30 minutes or 40 minutes of the stream, you'll see 263845 marked precisely at a demand zone. Look how it touched to the pip, up 120 pips, right? Stop loss would have been there about 36, 37 pips, touched it, went up, right? So you can take pending orders at these areas. I just like to see price come there to take a trade, right? That's what I like to do. But you can, once you learn, and that's the purpose of these streams, to teach you guys how to draw supply demand zones, and then to identify high liquidity zones out of those supply demand zones, and then to draw a tighter zone inside that high liquidity zone to where possibly price can come. So This zone, this light green zone was drawn right at the beginning of the session, right? It was drawn based on this candle, this M30 candle right here, right? And that M30 candle inside that that's a liquidity candle that grabbed liquidity and pushed price up 400 pips, I think 450 pips, yeah. Push price 350 pips, right? That candle. So inside that candle was a demand zone. If you go down to the M5 or M15, you will see a demand zone. That's exactly where I put 2638, and there was a zone below as well, right? So price touched it, tapped it, went straight up. It's possible to take trades here or uh, place stop loss under there and take a trade. It's very possible to do that. I just like to wait for price to get there, and then I like to be a little bit more hands-on. Okay. I hope you guys learned something from this stream today. I'll be back here tomorrow and repeat the same process. Again, I want to pull up this slide. This is the purpose of the streams. It's not, I'm not doing these streams to show you how much money I can make, if I can double my account, how much gains I can make per week, how much withdrawals I can make. It's not about that. These streams are to drive these 4 points home and hope that at least one person watching these streams will learn and apply these four, right? If you learn these four and apply these four in your trading, this will lead to the right result. You will either it'll lead to a win, which will be a low risk, high reward, high probability trade, or it will lead to a loss and you will lose less than your planned loss in that losing trade, right? So this is the purpose. This is why I keep putting up this slide, because I want you guys to understand the purpose, the mission of these streams. This is the mission. This will be the mission for the foreseeable future. This will be the mission of the stream and nothing else. All right. See you guys tomorrow.